EURUSD came and crushed another 1 to 5 in a continuation sequence, and this is how we did it. So looking at the market, starting on the 4-hour structure, we'd already taken the previous position up there and we explained how we got into that position. Now what we can see here is that we hadn't quite achieved the overall downside target objective level of around 1.8 as we just rested slightly above it. Now price formulated in a way that allowed me to get into this position, and we'll explain how we did that. But in terms of overall targets, I did look at this nice 4-hour demand level. There was a huge amount of volume in that space, so it was always going to be a bit of a destination as to where I think the market could mitigate against. So as we can see, we come to the market, and if we start scaling down the timeframes, we can see that price did begin to build a bit of a foundation. It built a base that then allowed for this idea to become present. We can see that the market sort of attacked the lower end of liquidity, and we made this slight internal shift. It wasn't a break in structure because you had to break this high before you could break the structure. But we had this shift, we returned higher, we mitigated back at the lower end of that boundary, that point of interest, and we begin to build price higher. So as price began to build and build and build, then there became an interest point in the market. Right, where would I expect and where would I anticipate price to want to get back into? So we can see that this was our first area of interest, our nice 4-hour candle of interest. We also had a secondary level up here as well that was in my thought process. And this is why I didn't take the absolute best entry that I could around that 1.80600, because I wanted a little bit more price action to be delivered before I was confident enough to get back in alignment with the trend. We teach that in the course, we teach that in the live sessions that we do, that we allow price to get into there, we wait for the flip of momentum, and then we can capture more high probability winning setups. So as price did trade ourselves up into there, we had liquidity captures, we had imbalances to come and trade into. We could even refine that 4-hour candle slightly more and just take this opportunity up here as well. So you could have got a better entry than me, but what I allowed price to do was get up into that area. Okay, as we start to drop the time frames a little bit more, we start to see the build up of price. Okay, we start to see how price expanded up into the high. We then had a secondary attempt at this point here to push again into a new higher high, and then we collapsed to the downside. So we had a bit of an internal shift after rejecting a higher point of interest. So at that point for me, that was an execution. So we took that level, I covered my position with the high, I covered my position with actually the entirety of that level. There we go. So I covered me and I had around about a 20 pip stop on that. So it was about 18 pips. And my target level was this 1.800 and then below towards 1.7500. So you can see obviously at the start of this video, you will get the entry and the profit that was provided there. But as soon as we got that break, we hit our higher time frame level, we got that flip of momentum. I was able to execute with more confidence than if I was just trying to take the trade. And then I was able to expand this thing all the way down into around about a 1 to 5.66 risk to reward.